Hi, everybody. My name is Angelica Robinson. I am an enrolled agent, but I am not your enrolled agent. So I'm going to put the disclaimer. The IRS says you owe them money. Now, what do? Well, we're going to talk about it here in this video. If you received a letter saying that you owe money, you're going to jump to conclusions. But there are options that you may be unaware of. We're going to walk you through exactly what you need to do next. And we're going to cover some penalties or even what you can do to settle for less. So let's go ahead and get started. You might owe maybe an underpayment. Self-employment income offer often requires quarterly estimated payments, and missing creates tax debt. So if you have a self-employed business, they say that you are required to pay estimated quarterly taxes. And by doing that, it can create a lot of tax debt. If you have a W-4 or if you work a 9-to-5 job, you were required to fill out a W-4 form. Based on that information you put on that form, it's going to tell your job how much they should take out for taxes from your paycheck. So filling that form out incorrectly could penalize you, or even a life-changing event. Maybe you got married, maybe you got another business, maybe you had another kid. All of that can affect your W-4. And of course, unreported income. If you forget to report income from a 1099, a side hustle, anything like that, it can definitely trigger a notice from the IRS. The IRS knows what was reported, how much you made. And by just trying to exclude some of that, is going to draw a red flag. And the IRS has the right to reject certain credits or deductions that you claim. All of this is based off a requirement, whether it's your filing status or whether it's an income requirement and whatnot. So if you're not aware of the requirements for all of the credits and deductions, the IRS has the right to disqualify it and make you pay whatever it is back if you have to. There are consequences of ignoring notices. They're going to start with interest and penalties first. And interest grows daily, making that amount that you owe a whole lot more. They have the right to garnish your wages. So they can take a nice amount from your paycheck, whether you like it or not. Worst comes to worst, they can freeze and seize money from your accounts. They can do a tax lien, putting public records that can damage your credit. And then, of course, asset seizure. They can take your property. They can actually stop you from using your passport if you owe so much. The IRS has power to do this, and we just fail to realize how powerful they are. First thing, confirm your tax credit. Review all of the notice that you received and have an understanding of what they may be talking about a little bit. So carefully read your IRS notice to understand what they claim you owe. Not saying that is correct, but what they claim you owe. Compare documents. Your tax return is going to be the answer to everything. Identify any errors. Look for the IRS mistake or incorrect information in their calculations. It is very possible that the tax preparer made an error on their end with your tax form. And if needed, you can appeal it. You can file an appeal or amend your tax return if you disagree with their assessment. So you don't have to jump to conclusions. You don't have to automatically accept what they say. Get with somebody that you know, get with a tax preparer, get with an enrolled agent, CPA, whoever did your taxes, ask your questions and see if what the IRS is claiming is correct or not. Step 2, you can do a short-term payment plan. So you can pay your tax debt within 120 days, not set up a startup fee. It can help reduce your penalties, and you can pay online. They also have a long-term installment, which is just an agreement. There are some setup fees that may apply. You have lower monthly impact on your budget, and you can do direct debit from your bank account. This is to make monthly payments over an extended period of time. There's another one called offer in compromise, which you can settle your tax debt for less than the full amount. There are some requirements. This is based on the ability to pay, requires your financial disclosure. You have to disclose everything you pay for, the amount that you make, your income, everything. But it could technically save you thousands. There are some requirements on this though, and you have to get with somebody who knows what they're doing when you're trying to do an offer in compromise. Requesting penalty abatement. There is a certain eligibility for this. You have to have a good tax compliance, and the first time penalty abatement is available even without reasonable cause. You're going to have to collect evidence showing why you can't pay this amount on time, whether it's a health issue, national disaster, financial hardship, whatever it is. You have to be able to show them proof, and then you will submit your request. You can call the IRS, or you can submit the form 843 explaining your situation, and you have to explain your situation in detail. Now, I'm not telling you to do this on your own. By all means, I am not telling you to fill out this form or this request on your own. Currently not collectible. So proving financial hardship, which proves that you cannot pay this amount, you cannot pay this fee or your penalties and your living expenses at the same time. You just don't have the money for that. You have to complete detailed financial information to the IRS to do this. IRS will require regular reviews. So they're going to ask you about an update on your financial situation every year. Every chance they get, they're going to ask you if your financial situation has changed. What this is going to do is temporarily stop collection activities on your account, okay? This gives you some breathing room when you really cannot pay. But know that just because you have currently not collectible on your account, it does not stop the debt. The debt still remains, but the collection stops temporarily. It's not for everything, temporarily. Prevent future tax. So adjusting your W-4 is going to be the first thing. Consider withholding additional amounts if you need to. If you're self-employed, make those quarterly estimated payments. Pay every quarter, set a reminder, set a deadline. Whatever it is that's going to remind you to pay these taxes every quarter. Tracking all of your income. Keeping detailed records of your 1099s, where you worked throughout the year, any side hustles that you may do, whatever it is that you did to earn income throughout that year, make a note of it. And last but not least, work with a tax pro. If your situation is complex or you just feel like you have a lot of tax questions, or maybe you're just not in the know, get with a tax preparer, an enrolled agent, a CPA, whatever it is, to make sure that you are fully knowledgeable and get your tax return filed correctly the first time. Taking action now prevents future problems. So you can reach out, comment below, let me know. How do you guys get your tax return done? Do you guys use TurboTax? Do you use Tax Free USA? What do you guys use to do your taxes? Because I hear a lot of people say they do it themselves. So it's got to be some type of software that you guys use to file your return, because I know you're not just doing it by hand. So with that being said, I hope that you guys learned a little bit of everything about the collection process and how the IRS notices are affecting you. And if you guys have any questions, drop them below. Let me know if there's a video you want me to drop or just have some tax questions. Drop them below. I will get to you and give you an answer the best I can. But until then, like the video for the algorithm, share with somebody who needs to learn more about those tax notices, and then subscribe for more tax and financial tips going forward. Until then, I'll see you guys in the next video.